If you thought that taxation has become more complicated with the introduction of old tax regime and new tax regime and budget 2023 pushing you to go for one of these, wait. You have more such complications in other income that you get taxed. Yes, we are talking about how REITs and InvITs will be taxed effective April 1st, 2023. And trust us, it cannot get more complex. But we are hoping that this presentation, this video, will kind of break it down for you and make it easier for you to understand. So let's dive right in to my presentation here to make it easier. Um, let us try to understand what are your income sources from REIT and InvITs, right? These REITs and InvITs distribute to unit holders different sources of income. One is a rental income, the other is a dividend, the other is interest, and one other thing is repayment of the principal, right? What are these essentially? These are the various cash flows that an SPV, a special purpose vehicle, generates for the trust. After all, the trust is the primary keeper of the various assets. It could be roads in the case of infrastructure, it could be various commercial assets in the case of REITs, and the income generated from these are paid by the SPV to the trust, and that is what you get as income flows for the units that you hold. And let's now try and understand what was really taxed thus far. So the REIT, the InvIT, was paying you back interest income or dividend income or rental or leasing income, and also a repayment of capital. But the first three components that I mentioned, the interest, the dividend, and the rental leasing income, was what was getting taxed for you as other income. Dividend long ago was exempt, but once dividend also came into the tax net some time ago, that also started getting taxed. So every time InvIT or REIT distributed money, they actually showed you how much was your interest part, your dividend part, or other income part, or your debt repayment part. So you would know what are the components to the cash flows that you're getting. Now, like I said, the one component that was not getting taxed was the repayment of loans by SPVs. So the SPVs were repaying back their trusts, and this money was being given back to you as repayment of capital. And those, basically was not taxed at any level. So essentially, this was like a loophole which was there for long. And REITs, where every time they paid you cash outflows, there was some component oftentimes which was the repayment part, which was not getting taxed. So the income tax authorities kind of woke up to this and decided that they will tax it effective 2023. So in one shot, what they decided to do was that all income, other than this rent, dividend, or interest, anything else that you receive from REITs or InvITs will get taxed, right? When they say anything, so that essentially means these distribution from loan repayments was also brought into the tax net, right? And we will talk about the what that would mean is that sometimes capital gains redemption capital gains treatment was not available for units that you redeem, not units that you sell in the secondary market, but units that you redeem. Now let's just get into details of this. um, Once the income tax authority said, the budget said that the entire thing is going to get taxed, people were like, this is my capital, I'm getting my capital back, why should I be taxed for this? So there's a lot of pushback. So the government made some changes to this announcement and said only not all income will be taxed, only specific sums will be taxed. And what are those specific sums? These can be calculated in two levels. First, the income distributed by the REIT or InvIT from sources other than dividend, interest, rent, which is already getting taxed, right? In this, not the entire amount will be taxed, only a part of that amount. What is a part of that amount? If InvIT or our REIT was issued at a certain original price, as long as these repayments were below that original price, you would not be taxed. Let us explain this with an example, for you to understand. Supposing an REIT InvIT was issued at 300, please remember when I say issue price, it's the issue price originally at the time of its IPO and not your buy price. You may have bought it at the secondary market at 350 or 280, but the issue price as far as that InvIT or REIT is concerned is 300. Supposing you bought at 300, and this REIT has been distributing rupees 8 per year as other income or the repayment or whatever, right? Repayment of debt for the last 4 years. That makes it 8 into 4, 32. Now, your acquisition price is 300, and this 32, has been so far paid. This 32 remains lower than 300. So, net 32 minus 300, it is still minus 268. So, as long as this carry balance is there, you will not need to pay any tax on this distribution until the point it reaches 300. This distribution, I mean, this in this case, it's a repayment of debt. I'm not talking of the interest, the dividend, they will continue to be taxed. Now, this repayment until the total sum paid every year from the beginning of inception of that RE80 or InvIT reaches that X amount, in this case being 300, you will not be taxed. Anything beyond that will start getting taxed. Right? So this is the funda. So they give you some concession. Instead of saying this entire repayment of 32 will be taxed, it will not be taxed over, until it reaches this point of 300. Now, this is not the only change that they made. They also made change to the capital gains tax. This that we are talking of is part of your other income, other sources of income that will get taxed at your slab rate. Now, in capital gains too, there have been some changes. Here again, we'll try to explain this with a illustration. The same illustration, issue price was 300, 32 rupees debt repayments. Now, you're not waiting for redemption, you're deciding to sell it in the secondary market at say 350 rupees. And normally, what would you have done? Your capital gains will be 350 minus 300, 50 rupees. But here's the hook. So the income tax authorities tell you your cost of acquisition is not 300, 32 has been repaid to you. So 300 minus 32, 268 is your cost of acquisition, right? So what does that mean? So if my cost of acquisition is 268 and my sale price is 350, my capital gain is not 50 but 82, right? So 350 minus 268, it becomes 82 instead of 50. So, what has the tax authority really done? They have just postponed your paying taxes on that 32. Here, indirectly, they are deflating your cost by reducing 32 to make your capital gain look higher, right? Because they are telling you, I have already given you concession on that 32 earlier. I'm not going to give you concession on that 32 now. So this is effectively, you will be paying tax on the 32 you received now, not earlier, but at the time of sale, right? These are the two main things that have happened. One, the repayment part of the cash flow that you receive will be taxed up, will not be taxed up to a point where the sum total is lesser than the issue price. After that, it will start getting taxed. The other thing that the change that has brought about is the capital gains tax. Capital gains tax, at the time of capital gains tax, all the sum total of these repayments made will be reduced from your cost of acquisition to find out the capital. Please remember, capital gains will arise only when you are selling it in the secondary market. Okay, if the units are being redeemed by the REIT, or by the InvIT, in that case the entire difference is treated as, there is a cost, there is a sale value, the same rule will apply, but it will not be capital gains, it will be treated as other income, right? So these are the two things. One, how on a yearly basis the cash flows you receive will be taxed. Dividend will be other income, interest will be other income, the debt repayment beyond the issue price will also be other income. And then at the time of capital gains, whatever concession you have received in that repayment part will be reduced from your cost of acquisition. What does this all this mean to you, and does this make REIT or InvIT unattractive? Because a lot of components of the cash flows are going to be taxed. They will eventually, but right now just try and look at the structure of these REITs. So here's the structure. you will see that in the case of IndiGrid, there's not been much by way of debt repayment. There's been interest, there's been dividend, but very less. The issue price is 100 per unit. As long as the sum total, I have just given, we have just given here, the current financial year. Please remember, we have to look at it from the beginning of the inception. That will be available in the, REIT or InvITs website until the point that it does not exceed 100 in the case of IndiGrid, until the point it does not exceed 300 in the case of Embassy, until the point it does not exceed 275 for Brookfield and 275 Mindspace or any other new issues that come, this sum total from the inception should not exceed the issue price. Until that point, this will not be taxed. So at some point, it will start getting taxed, and basically that means your overall post tax return on these would come down, right? So that is the primary, and therefore they do turn less attractive. But remember, IndiGrid has been paying much lesser than the others. The REITs have been paying more. Mindspace probably is paying much lesser as debt repayment. It's possible that REITs will fix a higher issue price henceforth to provide for this repayment component. Either which way, please remember, you're not escaping much, because if you're going to sell in the secondary market, whatever you enjoyed as deduction will be reduced from your cost of capital. So it's not like there is tax escaping tax. So yeah, the income that you receive from these REITs InvITs are not any better than other interest income or dividend income that you receive elsewhere. So that's the takeaway, and I hope this complicated tax has been simplified by us. Please do like and subscribe to our channel, because we seek to simplify, we seek to make it easier for you to make investment decisions through Prime Investor.